Hello, welcome to a daily recap of JS Services desktop application and strategy-based trading approach. So strategy-based trading is where we look to align our trading tactics with specific market state conditions and strategy themes. This is our market grid. You can see all the different symbols for different futures markets, and the color coding relates to what the market state condition is. So once you understand the codes, you can quickly identify markets that are positive trending, neutral states, accelerated states, and a state that we're going to look at today, which is corrective states. So bull trend correction is a market state that the market has been trending, making higher move highs, higher move lows, and we've had a sharp corrective break against the trend. I like these states because they do give you the opportunity sometimes to participate in that lower exhaustion spike and get you back into the new trend move higher. Today we can see we have three commodities that are in this market state condition. We have the crude oil, both the front and the second option, along with corn and coffee. The condition is bull trend correction, so now we're going to look at the structure, and the structure for the crude oil is a little different than the corn and the coffee. So we're looking at price structure. For the corn, we have our sentiment bias below the market, and our sentiment bias is the over-under number. That's the R level, so buy breaks above here, sell rallies below here. Where that price point is on this market state condition is going to skew it. And so in the corn, it's below the market, and we have that same structure in the coffee where that point is below the market. So in a bull trend correction, we're anticipating this area to be the low point of that corrective move. Same with corn. We're anticipating this level, 364 3/4, to be that low point of that corrective dip. The crude oil, it's a little different. We have sentiment balanced within the midpoint of the critical range. And so in this structure, the corrective action of this bull trend correction is true below the R level. So as long as we're below 36.83 in the crude oil, the market's going to be in this corrective state. If we get above that 36.83, that might be a tell that we're in for a resumption of the bull trend. Typically, if the market does break structure, in a corrective market state, it can either drop it into a difficult sideways digest, or the trend can resume. And so that's when we take a look at the strategy themes. So since we're in this bull trend correction market state, and because structure is balanced with the sentiment in the middle, these are the optimal and hedge strategy themes for the session. So we are in a corrective state, so the optimal thing to do is to participate in that correction and use a sell R fade. So we're going to fade momentum into the 36.83 level, anticipating this corrective trade to continue. The sell-off does go lower and breaks below this 35.88 level, giving us an exhaustive bounce or exhaustive signal. We bounce back up above it. We'll take that as a buy DP reversal strategy, anticipating a bounce back up to at least the R level. And if we break structure, either we fail below the downside pivot and this correction turns into more of a transition into more of a neutral state, or maybe even a negative market state, or if we break out above the R level, that's going to be a tell that the corrective trade is over and we might be transitioning back into that bull trend. So if we look at a daily chart, it's always nice to look at the big picture structure. We can see how this corrective action is playing out. So we've had this positive move, and then we had a couple days of negative action against that positive. And so as long as the market's below 36.83, we should anticipate this corrective action to the market to remain hard pressed, and we really need a failure from 35.88 to really let things loose potentially on the downside. And if they can't hold that, we could get a bounce back up into a sideways trade. But if we get above 83, it has the potential to engage the bull trend, or at least bounce the market back up to this upside pivot area of 37.78. So as we come into the market at midnight, just going to go through the overnight session as well as the regular US session. I'm going to start moving forward in time as we come into the European Open. We can see this market is just digesting within this band. You know, we have a couple different metrics here. We have our alert distance and our variance. So the variance is going to be the optimal entry area, and the alert distance is really a signal acceptance zones. This is where we want to execute our tactics within this area, and we can use it as a bias tone as well. So if we move below this variance, we're leaning to the downside below the R level, and we get above it, that's a positive signal. That's the tell that we've broken structure. And we broke structure a little bit here overnight, you know, right at the initial opening, and as we're coming in, we're kind of hugging these bands, so we have a little symmetry going on there with a little press below. Now we're starting to get a positive signal. So this is a breakout signal right here, where the market has moved below the R level and now it's come back above. If this market was going to remain in a corrective state, we know it needs to stay below this 83 level. It's not doing that, and this is the trigger. So at this moment, we're looking to enter at the variance. So they're providing us with an entry here for a buy R breakout. What's more important than this is the fact that the market is telling us that it's in a hedge strategy theme. It's telling us that this statement is no longer true, where the corrective trade has got an issue because we shouldn't be trading up here. And so even if we do make a new move low, we're not anticipating this aggressive negative momentum. You know, it would be more of a bounce into neutral. The fact that we're doing this negates this and puts us more into this hedge theme strategy. And so now we're focused in on this buy R breakout. So the market moves forward. It confirms this buy R breakout, and what we want to do here is now our expectation is shifting that we are in a bull trend, and we should expect the market to perform as a bull trend would, with making low, you know, higher move highs, higher move lows, and starting to trend higher. So we're always watching price action within market structure. So here's the market structure points, and here's the price action, and we're just viewing this price action within the market structure. And we're just as we're watching the price structure, we're watching how's the market moving within market structure. And now I'm going to add in our minor levels. So one thing that the price map does, it identifies the segment moves the market's trading in. So this is a one segment, 1 APMD, average price map distance. This would be a 2 segment move. Anytime we get a breakout signal, we're always looking for 2 segments. So our target would be 38.73. In addition, when you're trading at the R level, this is a size trade. This is your max size, because this is the point that determines the market state, the structure of the market state. This is the best value area, anticipate the most liquidity. So if you're putting on multiple units, you know, even just as a standard rule of thumb, you know, half APMD, full APMD, 2 APMDs for a trade opportunity, as this would be kind of a max 3-4 unit opportunity. If you're doing a, you know, max 3 unit trade, you know, this would be a maximum. And so at this moment here, it's coming into the CR plus level, attaining a half APMD, and we're working price action. Here's a higher move high, higher move low, higher move high, but the other lows are back down here. You know, for what kind of just watching this structure and the market, you know, maintain the second structure, and we're always looking for the market to resume that bull trend posture. And so now, as the market breached this metric here of the CR plus, we expect it to stay above this level. You know, it should stay above this metric. You know, we should see it stay above 37.20, and we should continue to see it climb this market structure ladder. You know, as the market is moving higher, we see the market's performing as a bull trend. So this gives us confidence that this theme's engaged, and it tells us that we want to get on this train. And we have a trade vision that the market's going 2 APMDs to 38.73. It may be wild. We could have some big swings, and it could just go linear and go right there. We just never know. And so what we do know is that when the upside pivot is a major inflection point. You know, this is going to be the hurdle for the next bull trend extension. So we should anticipate a reaction here. And where can we get that reaction to? Well, we could get a reaction back down to the next rung on the ladder. Just normal price action. So as the market's pulling down here, we're not thinking that, oh, that this rally is over. We're thinking they're giving us an opportunity to participate, off these price structure low points, off this market structure level, in a normal of just climbing the stairs. Here's an interesting opportunity. As the market pushes into this upside pivot area, you can use these variances to your advantage to kind of leverage up or work a position, kind of more micro trading, where you see the market stabilizing at this variance, anticipating to go to the top of the variance, and really just work this variance as you're working your underlying theme. And again, it's always a theme. You want to engage your tactics to the theme. If that's your story, you're sticking to it. There's no thinking. If we're in this theme, what should it do? It should come here, because that's just a function of the structure of the market. It's attained a full APMD, so that's money. It's paid out a full APMD, that's great. We really needed to breach this metric above the upside pivot to have give us additional confidence that the market's going here. At this point, we could easily rotate back down to the R level, and the underlying bull trend is still good. At this stage, it still has the potential to get excited. So the market holds this band, and now all of a sudden we get a fresh positive signal. So we're getting a buy signal. It's not on the list, but it's in alignment with this theme, and it's at a major structure point. So it's a high value buy signal for a buy UP breakout. And so this would be, if this is a 3-unit opportunity here, this is a 2-unit opportunity. And again, we're looking for half APMD, full APMD, and even 2 APMDs on this opportunity. Focusing on the metrics, looking at price action within market structure, so you can just, what's our expectation? We're in a positive trend, higher move highs, higher move lows. Here you had the market squeeze us a little bit, but it held market structure, so we're always looking for confluence with price action and market structure. So now we have a market giving us a fresh buy signal, because it's breaching this upper pivot. And here we have some nice confluence with price action and our metric. So we can really define our risk. So even if we're defining our risk as buying the market off the figure or at this variance, we can use this price action that's aligned with this metric. And here, stagger our stops. What are our targets? Half APMD, full APMD, and 2 APMDs. All the risk-reward metrics work out. Market kind of beats on our head for a while and just gets a bit of a nightmare, and then all of a sudden near the end of the day we have a little bit of an excitement and event, just a real coil. As you're going through this and you're second guessing your opportunity, go back to the facts. Fact is, we're no longer in a corrective trade. Fact is, we're in a transitional hedge theme. It's a buy. The original signal is worth 2 APMDs. It hasn't played out. It has paid out already. The market's holding positive price structure. That's a fact. Fact is, as we breach this metric, fact is we're still holding positive price structure. That's our story. We're sticking to it. And now we're back above here. We're making a new move high. So now we can even tighten up our risk based off this variance here and this price structure. This is nice action here where they push into this level. We expect a reaction and we get it. One thing you want to work on your trailing stops is you're riding the theme. Take your profits on profit surges, buy them back on the retest. Don't use a trailing stop where you're getting stopped out on the pullbacks. You're working a theme. As long as your story's true, stick with it. Take your money on profit surges and reload. If it doesn't pull back, you maintain a position. You always want to maintain a position, and so that's how you're working your leverage. Here we get it. And in addition to that, if you have only a single unit on, as the market's coming up into the figure, ratchet your trail stop up to the lower variance. Don't just step out and put the limit order in. You're in a trending market. You're in a trend move. The market may do something like this, and it did. And if you, instead of putting your limit order here at the figure, ratcheting up your trail stop super tight, and let the market get you out. Prove it to me. Break structure. Get me out. Otherwise, I'm in it. The market continues, and we get a test of the lower alert distance from the UT1. And that may be all we get. You know, we can see our price structure here. We've got that point there. And the market starts to, you know, come in closer to the close, and we're getting kind of a non-event big mess. And we pretty much, you know, end the session up, and we finally are attaining that 2 APMD target. So, you know, the market from our original signal, here's our buy breakout signal. What's our trade vision for a breakout? 2 APMDs. Trade management, we're leveraging up on this one. You know, half APMD, full APMD, 2 APMDs. We have a second strategy that comes into play here. Gives us another buy breakout signal, so we're entering here. Half APMD, full APMD, and they don't give us our 2. But we are back in that bull trend, so if you're a trader that likes to trade swing trade, you may have just bought the low of the next reaction higher. The market is trading up here, and we're in trend mode. And so now, you know, this market more likely will re-engage, be back in a bull trend, and then we'll see the we'll see how the price structure shifts. But let's just say the R level shifts up. You're just working that structure, and you're anticipating this trend to continue until you're proven wrong and you're not true. You don't need, you know, absolutely when you attain metric targets, you want to tighten your trail stop up. You know, you should expect a reaction, even if it's just a reaction back down for a half APMD. And that's money, and you have to think, you know, how are you going to feel if the market's here? Are you going to be getting squeezed and wanting to get out of that opportunity? What's it already paid out? A market that's already paid out 2 full APMDs, how much more juice does it really have left into it? Maybe another one, another APMD? And so those are the considerations when you're in an opportunity. When you're here, it's more fearful, but you have the biggest opportunity, and you have to step out and go for it more, because you've got the potential for that initiation of that impulse, and the full power and probability of seeing it attain these metrics. So it's important to understand. Today we're focused on this bull trend correction, and specifically a bull trend correction when the R level is equal to the directional. And so you can see that here. You can search these out. They're powerful market state conditions. You've got a market that's pressed, and it needs to stay pressed if it's going to continue that corrective action. As soon as you get a break in that press, it can be a trigger for a pop back into the trend. So it's a great market state to search out. Again, strategy-based trading, focus on the strategy condition, not so much the market. You have the metrics built in that will allow you to kind of transition from one market to the next seamlessly. Obviously, know your economic events that are coming out, so you're prepared for those. But focusing on the strategy condition can allow you to become an expert in those themes, and you'll be able to pick up on the tells of the market. For more information, please contact us at info@jsservices.com. And if you're not already a subscriber, you can request a demo at jsservices.trade. Look forward to working with you.